The chapter we will be discussing here is income which do not form part of total income, that is exempted income. All these four topics will be discussed in the exempted income. And the first topic is treatment. Generally, exempted income will be treated in two ways. One is we do not add it to total income at all, like profit from partnership firm or HCF. We do not show it in gross total income only. But whereas in the other method, we add to the total income and deductions also, like bank interest. 80 under 80 TTA we show in deductions, and in income from other sources we show bank interest as an income, where in same way says income also. In 10 AA we show it as deduction. When we come into the examples of exempted income, there are lot many examples, but we will be discussing only few which are important from exam point of view. And first one among them is agriculture income. Agriculture income will be consist of sale of agriculture produce or else rental income from agricultural land also included in agriculture income. But it does not include dairy farming, breeding of rearing of livestock, poultry, etc. These are not included in agriculture income. And if agriculture income is processed, which can be sold in raw form also, then income will be divided between agriculture income and business income. They have given here 4 products for which we have to divide into these ratios in order to give bifurcate between agriculture income and business income. This will be exempted, this will be taxed. And for tea it is 60% and business income will be 40%. For coffee grown and cured it is 75% agriculture income and 25% business income. For coffee grown, cured, roasted and grinded, 60% is agriculture income and 40% is business income. For sale of rubber, 65% is agriculture income and 35% will be business income. See, they have given only four products here. If we have sold any other product other than these 4 products, then simple sale value minus expenses. But there will be 3 things we need to calculate. One is processed product. इसका सेल प्राइस minus market value of products used here, that is and less expenses for processing. This is taxed as a business income. The other thing is this market value of product used in processing minus cost of cultivation. This will be agriculture income. And the third one is sold as it is. It will be market value of product sold in raw form minus cost of cultivation. It will be also agriculture income. Okay, same sale value minus expenses, but we need to calculate 3 for processor income, for product used in processing, and product sold as a raw form. We have an example for this. Let's see into that example. It's the first illustration. Mr. Amar grows sugarcane and uses the same for purpose of manufacturing sugar in his factory. 40% of sugar produced is sold for 12 lakhs and the cost of cultivation of the sugar is 6 lakhs. Cost of cultivation of balanced sugar is 15 lakhs and market value of same is 25 lakhs. After incurring 1.5 lakhs in the manufacturing process on the balanced sugar cane, the sugar was sold for 30 lakhs. See, some 40% of sugar is sold in raw form. So for that 40%, sale value is 12 lakhs. Cost of cultivation is 6 lakhs. So 6 lakhs will be the agriculture income. Next for balance 60 lakhs, 60%. See here, cost of cultivation is 15 lakhs. Market value is 25 lakhs. This so market value 25 lakhs minus cost of cultivation 15 lakhs. This 10 lakhs will be also agriculture income. And next, we have incurred 1.5 lakhs to process the and sell the sugar cane. For that 60%, sale value of sugar cane is 30 lakhs and market value, because we got sugar cane into this, we did not get it for free. So for that 25 lakhs we need to deduct, and cost incurred is 1.5 lakhs. 3.5 lakhs will be the business income, which is taxable. Okay, so 3.5 lakhs business income. So 10 lakhs is here and 6 lakhs is here. Okay, likewise we need to calculate in case of other products, but when it is among those 4 products, first what we should do is see the example. Mr. Nilesh manufactured latex for rubber. What is the ratio of rubber? 65% and 35%. Plants grown by him. These are then sold in the market for 36 lakhs. Cost of growing rubber plant is 16 lakhs and manufacturing latex is 12 lakhs. See, for this what we should do is directly sale amount minus expenses. 16 lakhs minus 12 lakhs. Balance is there. This should be bifurcated as 65% as agriculture income and 35% as business income. We should first reduce the expenses. Balance amount will be bifurcated between agriculture income and business income in given ratios. Okay, and let's see the third example. Ankur, the owner of a land situated in Kerala, used it for growing their own different types of fruits, paddy, vegetables, and flowers received from Yahoo Movie Limited, Chennai. 5 lakhs rent towards the using of this land for shooting film. See, they have received the rent on agriculture land, but not for agriculture purpose. So this is not an exempted income. So this is taxable income. Cannot be treated as agriculture income. Okay. So we have done with one part and the other part has left. That is integration of agriculture income is with non-agriculture income. If these three conditions satisfied, then we need to compute the tax as follows. It is just to charge non-agriculture income at higher rate of taxes. Still we get benefit of agriculture income, but it will be taxed at higher rate. Non-agriculture income will be taxed at higher rate. So this is only for individual HUF, AOP, VOI and artificial judicial person, not for partnership firm, not for LLP and not for company. If net agriculture income is more than 5% for these individuals and income other than agriculture is more than basic exemption limit. Basic exemption limit will be different for them, like 2.5 lakh or 3 lakhs, 5 lakhs. So respective basic exemption limit should exceed based upon the age of the individual. Then only the section will apply. What are the conditions for only these 5 assessees and income is more than 5,000 agriculture income? Other than agriculture income should be more than basic exemption limit. Then compute the tax as follows. First compute the tax on total income. Agriculture income plus non-agriculture income, same as the normal income. Then add agriculture income to basic exemption limit, that is in some cases 2.5 lakhs, 3 lakhs, 5 lakhs. Based upon the age, add the basic exemption limit to that agriculture income and find tax on that income. Then step 1 minus step 2 will be the net tax payable. Then add surcharge, rebate, cess as they are applicable. If applicable, apply them, and cess is mandatory. Then you will arrive at tax payable. So we have an illustration on them. It will give you more clarity. So here income from salary computed is 3 lakhs, means computed in the sense they have deducted all the deductions including standard deduction of 50,000. So we need to take directly 3 lakhs. Income from house property computed means we need not deduct any 30% of deductions. So 2.8 lakh we need to take. Agriculture income from land in Assam is 4.5 lakh and expenses incurred for earning agriculture income is 1.6 lakhs. So when we add this and deduct this, net income will be 5. No. So add that. It will be 8.7 lakh. So up to 2.5 lakh nil. See, first we are calculating for 40 years age group. I'll wait just a minute. For 40 years age limit, first find out the step 1, tax on total income. Up to total income is 8.7 lakh. So up to 2.5 lakh nil, 2.5 lakh to 5 lakh it is 12,500 and more 5 lakh to 8.7 lakh it will be 74,000. I guess. So it will be 74,000. Total will be 86,500. So step 1 will be 86,500 and step 2, add agriculture income to basic exemption limit, that is 2.9 lakh to 2.5 lakh. Then we will get 5.4 lakh and up to 2 lakh 50,000 nil, 2 lakh 50,000 to 5 lakhs it is 12,500. On 40,000 it is 20%, that is 8,000, that is 20,500. So step 2 we got 20,500. I'll deduct. Step 1 it is 86,500 and step 2 it is 20,500. Step 1 minus step 2. 66,000. There is no surcharge and rebate because it is more than 5.8 lakh, and surcharge it is less than 50 lakhs, so we don't have them. Then add directly 4%, we will arrive at 68,640 rupees. This is for 40 years age group. See here, step 1 86,500, 20,500, step 2 66,000 and 68,640 rupees. Okay, and we will calculate for 75 years age group. What is difference between 40 years and 75 years? Basic exemption limit will be different for them. So for 75 years age group, it comes under 60 to 80, and basic exemption limit will be 3 lakhs. So up to 2.5 lakhs nil. Sorry, up to 3 lakhs nil. 3 lakh to 5 lakhs 10,000. 5 lakhs to 8.7 lakhs. It will be 74,000. Then total income will be 84,000. So step 1 84,000. Step 2 add agriculture income to basic exemption limit. It is 2.9 lakh plus 3 lakh equal to 5.9 lakh. So nil up to 3 lakhs, 10,000 up to what we call it, 3 lakh to 5 lakhs. So more than 5 lakhs 90,000. On 90,000 20%, it is 18,000. Then 28,000. Step 3 will be 84,000 minus 28,000. 56,000. Add there is no surcharge and rebate because it is more than 5.8 lakhs and less than 50 lakhs. Just add 4%, we will arrive at 58,240. So see here, step 1 84,000, step 28,000, step 3 56,000. So 58,240, we have arrived at the income. So we are done with agriculture income. What are we discussed in the agriculture income? One is what comes under agriculture income and what does not come under agriculture income, and the bifurcation of ratios for food products and for other products, how to calculate the income, business income and agriculture income, and for integration of agriculture income with non-agriculture income. It comes only when agriculture income is more than 5,000 per annum and other than agriculture income is more than basic exemption limit. So coming to the next example, amount received from HF by its members will be exempted. Share of income to the partner in partnership firm will also be exempted. Compensation received on account of disaster by any individual or his legal head from state government, central government and local authority will also be exempted. And illustration is 5 given for that. So the amount of 5 lakhs was paid on 17/22 to the parents of Amit by government of Chhattisgarh as compensation to aggrieved family whose only son Amit lost his wife in Mao's local bus bomb blast in Dantewada. Examine with reasons whether the amount of compensation received is chargeable to tax in assessment year 2022-23. See, the amount is received by legal heir of victim by state government due to some disaster. So this is covered in the exemptions. So that amount is exempted from the tax. So coming to the other exemptions, allowances given to the MPs, MLAs like daily allowance, constituency allowance will be exempted income. Pension from government also will be exempted. Income of local authorities will be exempted. Only this, all the incomes will be exempted. Only this is taxable. That is, if the such local authority earn income from supply of a commodity or service outside its jurisdiction, then it will be taxable. Other than that, if it is in its own jurisdiction, it will be exempted income. And any other source of income for local authorities will be exempted except this. And the last one is 1026 AAA. It is for a recognized individual. These two income of a recognized individual will be the exempted income. That is, income from any source in the state of Sikkim. If it is earned in the state of Sikkim, then it will be exempted. Or dividend or interest received on securities. See, if it is on dividend or interest income, it can be from any state. But in case of any other income, if it is exempted only if it is from the state of Sikkim. These two interest will be, however, exempted even if it is earned outside the state. And no exemption if Sikkimized woman marries a non-Sikkimized individual on or after 1/4/2008. If she married before 1/4/2008, exemption is available. And if Sikkimized men marry Sikkimized woman after 1/4/2008, it does not make any difference. Still, the exemption is available. Exemption will not be available only if Sikkimized woman marries non-Sikkimized individual only after 1/4/2008. So we have an illustration for this section. We will discuss that first. Mrs. J, a Sikkimized woman, marries Mr. K, a non-Sikkimized on 1st January 2008. During the previous year 21-22, she received a rent of 12 lakhs from letting out of house properties situated in the state of Sikkim. Is she liable for income tax for assessment year 22-23? Will you answer different if she married Mr. K on 16th April 2008? The exemption will not be available only if she marries on or after 1/4/2008. Here she married on 1st January 2008. So exemption is available in this case. If she married on 16th April 2008, then exemption will not be available. Okay. And that's all about exempted income. If you want to cover all the exempted income, you can go through the study material. Then the third topic is restriction on allowability of expenditure under section 14A. See, for exempted income, we do not claim any expenditure. So we should disallow that. How much expenditure we should disallow is the matter, and we will learn in this section. Addition of 3 items basically. All these 3. Expenditure directly incurred for exempted income plus common expenditure into average value of investment in exempt income by average value of total investment plus 1% of average value of investment in exempted income. Sum of all this expense will be disallowed from the expenses. because we incur it for exempt income. As exempt income is not taxable, we have no right to claim such expenditure incurred on exempted income. The fourth topic and the last topic is deduction for cess. I think we have an example. No, we don't have an example. So the last topic is deduction for cess. Deduction is available for all types of assessees, individual, HUF, company, whatever might be the assessee. For all those, it is available. The only if they are engaged in manufacturing or producing any article or computer software and who has received up to approval up to 31st March 20 and begins manufacture or production up to 31st March 21. Okay. How much deduction is available? This is for whom? For whom it is available? All assessees engaged in manufacturing or producing of articles or computer software and received approval up to 31st March 20 begins manufacturing up to 31st March 21. For them, this deduction is available and it is for first 5 assessment years 100%. See, this is important because they give the date of incorporation. We need to calculate in which year they are so that we can arrive at what is the rate of deduction they are eligible for. So if it is first 5 assessment years, 100% of export profit will be eligible for deduction under section 10AA. If it is next 5 years, then only 50% of export profit. Then next 5 years, amount debited to P&L account and credited to cess. What will be the amount debited to P&L account? It will be the lower of reinvest allowance reserve account or 50% of export profit. So we have two terms here, export profit and reinvestment allowance reserve. We don't know the meaning of these two. So let us learn in that one. Export profit. How we will calculate that one? PGBP of cess, complete total profits into export turnover by total turnover. Turnover is that export income which is brought into India in time. If it is not brought into India or if it is bought after that time, we do not include it in export turnover. And export profit does not include flight, telecommunication charges, all these expenses we do not include in the export profit. Okay. And assess reinvestment allowance reserve. It should be whatever amount credited to that cess account should be utilized within 3 years, maximum 3 years. And we can use only for acquiring new plant and machinery in year 1 and put to use in 3 years from end of previous year in which reserve was created. We cannot use for dividend distribution, remittance outside India's profits, creation of asset outside India. If we do not comply with any of this, that is we have been used it for in 3 years or we have utilized it for these 3 purposes, that income will be added to income. That amount will be added to income and taxable. Previously whatever they have given the deduction for us will be taxable now by treating it as deemed income. So we have illustration number 7 for that. Total income of unit A located in cess is 120 lakhs. Profit of business of unit A 45 lakhs. Export turnover of unit A is 60. Total turnover of unit B located in DTA is 225 and profit of business of unit B is 25. So how to calculate the deduction under section 10AA? What is the formula for that? PGBP of cess into export turnover by total turnover. What is the PGBP of cess? Cess is unit A. So what would be the profit of business of unit A is 45 lakhs. Export turnover 60 lakhs. Total turnover is 120 lakhs. So when we calculate it, it comes under 22.5 lakhs will be the amount eligible for deduction under 10AA. And they have given that no deduction under 10AA is allowed in respect of profits of business unit B located in DTA. Let's start with the test your knowledge questions. Just a minute, I'll expand this. Examine with reasons based on provisions of the Act as to chargeability of following receipts to the tax in assessment year 2022-23. Rent of 60,000 charged from tenants occupying houses constructed on land situated in India and used it for agricultural purposes. Tenants work in nearby industrial area and occupy these houses for their own residential purposes. See, they are for agriculture purpose only, but the tenants are using it for industrial purposes. So this will be taxable income. This does not come under agriculture income and will be taxable income. And the next, income of 75,000 derived by Anand Nursery from sale of seedling grown without carrying out all the basic operations on land. Even though basic operations are not covered under on land, this seedling process comes under agriculture and it is exempted under agriculture income. So, and exempt from the tax. Mr. Gaitonde, born and brought up in state of Sikkim. He is Mr. The exception is only to Miss. So, woman had a net profit of 2.25 lakh from business located in Sikkim and interest of 55,000 on securities bonds issued by government of Rajasthan. What are the incomes exempted? Any income from Sikkim state. Here, business income from the state of Sikkim, so it is exempted. Second one, interest and dividend from any state it is. So even if it is from Rajasthan, it will be exempted. So both will be exempted, shall not be subject to tax. Income of Gaitonde from the business located in Sikkim and interest income on securities or bonds of government of Rajasthan shall not be subject to the tax. Okay. Next question. Rudra has one of the cess and other DTA. The company provides the following details for the previous year 21-22. Total sales is 6.5 lakhs and 2.5 lakhs. Total export sales is 5.6 lakhs and 1.6 lakhs. Net profit is 70 lakhs and 20 lakhs. Compute the eligible deduction under section 10AA of Income Tax Act 1961 for the assessment year 2023 in the following situations. If both the units are set up and start manufacturing on 22/5/2014, if it is started in 22/5/2014, then calculate the year in which they are asking for deduction, because for first 5 years it is 100%, for next 5 years it is 50%, next 5 years it is amount debited to P&L account. So calculate the year in which they are. In first case, they have started in 22/5/2014. So 14, 15, 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22. So these are all previous years. So assessment year will be 22, 23. 1, 2, 3, 4, 5, 6, 7, 8. 8th year. So it comes under 50%. If it is in the second case, it is started in 18. So 18, 9. So calculate from here. 1, 2, 3, 4. The second case it is 4th year. So it is in first 5 years. So 100% of PGBP into export turnover divided by total turnover will be eligible deduction. So calculate the PGBP. So first we need to find out PGBP of CES. See, here they have given Rudra Limited has one CES unit and one DTAA. They have given total amount of Rudra Limited and DTAA. So if we subtract this from total amount, we get CES amount. So from total profit of 70 lakhs, deduct 20 lakhs. So that we arrive at 50 lakhs. PGBP of CES is 50 lakhs. Then calculate export turnover. Export turnover 5.6 lakhs minus 1.6 lakh, that is 400 lakh. Total turnover 6.5 lakh minus 2.5 lakhs, it is also 400. So total turnover will be 400 lakhs. So in first case 50 lakhs into 400 lakhs by 400 lakhs into 50% in 25 lakhs. Sorry, 25 lakhs. In second case it is 100%, that is total of 50 lakhs. Okay. And is there any question pending? 25 lakhs in the first case and 50 lakhs in the second case. Okay. So this is the end of this chapter, including illustrations and last test your knowledge questions. Thank you. In case of any doubts, please mention in comment box. And one more thing, here in agriculture income, there are 4 rates. All these 4 rates. So I did not have any trick to remember all these 4 rates. If you people know any trick for the same, you can mention in comment box so that it will be useful for many people. Thank you.